In my mind, it's a question between Ether winning all or winning a very, very big chunk of an enormous pie.
I think the biggest, clearest bet of all is Ethereum.
6 months from now, we could be talking about some entire new case we couldn't have imagined and estimated right now.
All these analogies are going to break down. And so if you have these, it's a cycle, you have to sell at the top of the crypto cycle because it's going to go down, because every 4 years it goes up and then it goes down. Well, what happens when that cycle breaks?
I think it's, in either case, it's an incredible long-term hold. The question is how incredible, what varying degree of incredible.
If you could only own one asset over the next 12 months, what would it be? It'd be Ethereum. Because it's the least risky with the highest rewards.
Is Ethereum incredibly undervalued right now? Could it go hypothetically to $20,000, $40,000, or even over $100,000? If you subscribe to the Lindy effect, the economic phenomena in which a technology's life expectancy is proportional to its current age, then Ethereum being the top smart contract platform for 6 years now would suggest it likely is. In today's video, we are going to go over 4 investors who have high conviction that Ethereum is currently extremely undervalued. These investors are all at the top of their respective fields and range from technology billionaires such as the Winklevoss Twins to James Wang, an ex-ARK Invest equities analyst. All 4 of these investors have made heavy bets that Ethereum is going much higher and explain why they have personal price targets ranging from $20,000 all the way up to over $100,000 over the next few years. Make sure to stick around to the end of the video where we will go over Vitalik Buterin, the creator of Ethereum's latest interview, and why he thinks Ethereum could be worth much more in the future. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind. First up, here are billionaires Cameron and Tyler Winklevoss, who founded one of the largest cryptocurrency exchanges, Gemini, speaking on why they think Ethereum is undervalued and what price they expect it to get to.
When a product is very sticky and has a lot of product market fit, a lot of users and momentum, something has to be 10x better for people to switch. Ethereum has a huge first mover advantage. It's on every major exchange. When people build stablecoins, like Gemini's built the Gemini dollar stablecoin, you start building it on Ethereum. There's so much building that's been happening there that that's where you want to go, because that's where eyeballs are. The thing that has to happen though is scalability and throughput. Its ability to process many transactions cheaply. So right now, because that migration, so Ethereum 2.0 or Ethereum 2 is promises to solve this, and that migration is happening. But right now, there can be so much excitement that if things get hot or Ethereum can fall victim to the weight of its own success. So transaction prices go through the roof when there's a lot of activity and people are moving through different projects. So if it doesn't scale or make that migration successfully, which I do believe it will, then that could be a problem. And just to build on that, Tyler, to take the other side of Ethereum, it's sort of theirs to lose. If you look at the operating space, there are a few major operating systems around the world. You've got OS, iOS, Android, Linux, Windows. So it's not just sort of one operating system. There are network effects for sure, but we do see a couple of really big systems, at least in computing. And so it is possible that some newer layer 1 protocol says, hey, we're going to start at proof of stake. We're going to make a better smart contract language. It's easier to program, more secure. Right. I think Tezos is an example of a project that launched with these things from day one. It hasn't had the same uptake, at least yet, as Ethereum, Maybe Solana's up there as well. I'm not as familiar with that project, but I think that there's going to be opportunities for other people to enter the race with potentially a 10x better project. But I think in my mind, it's a question between Ether winning all or winning a very, very big chunk of an enormous pie. I think it's in either case, it's an incredible long-term hold. The question is how incredible, what varying degree of incredible, right? 5,000, 5 to 10 feels like a reasonable range towards year end. And I guess if we're currently at Ethereum's maybe 50% market cap of Bitcoin, and we think Bitcoin's a 10x from here, I see no reason to believe that Ethereum isn't at least a 10x sort of lockstep.
Right.
And maybe quite frankly, a lot more, to my previous comments about how do you put a bound on this type of innovation and creativity? You really can't. So there's a psychology here. Like I remember when Bitcoin broke 50,000, it was like hovering at like 48, 49. And we're humans, right? So there's psychology. I think if Ether breaks 5,000, it just feels psychologically like a really interesting inflection point.
People like round numbers.
Yeah, people like round numbers. Then at 10,000, people's heads are going to explode. Yeah. So look, we love both these projects. They're incredible, and I think that they'll probably move lockstep in many ways. But right now, the focus has been on Ether. It's super hot, and you could argue that it was not there in large part because people were really focusing on Bitcoin during the early half of the pandemic and inflation. And I think that will come back, and it will just sort of go between the two.
So there's the Winklevoss Twins with a target of $5,000 to $10,000 on Ethereum, but potentially much higher. A key theme you will find all of these investors share is that there is potential of the Ethereum blockchain that we just don't even know right now. Next up, we have ex-hedge fund manager who went on to found Real Vision, macro investor Raoul Pal. Raoul Pal became famous for his incredibly accurate macro predictions, and here he is explaining why he believes Ethereum is undervalued and what price he expects it to get to in the next 12 months.
Well, my biggest bet, I think the biggest, clearest bet of all is Ethereum. If you say, if you could only own one asset over the next 12 months, what would it be? It would be Ethereum. Because it's the least risky with the highest rewards. Because of the massive changes happening. I understand there's risk that they may not go through in the way, the format people think, and there's some other, questions being asked, and that's all fine and good. But I think probability is that you're going to end up with a reduced supply, massively increasing network usage, interconnectiveness of that network, and then you're going to go to proof of stake as well, which gets rid of the green argument. I think you're going to see institutional investment in the space. So I think ETH is the single bet that there is right now. Just trades like shit right now, so it needs to get some traction. But it feels like we're in for the double pump, the 2013 repeat. I think this cycle extends somewhat, so I'll give it the next 12 months.
And for ETH?
At a minimum 20,000.
And would that mean the flippening would happen?
No, not quite.
Later.
Yeah, not quite. I don't think the flippening happens this time around. I think it happens maybe over time. So let's see, but it could do. Maybe the ETH 2.0 drives the flippening. Maybe it's a short-term boost. We have huge speculative blow-off claps. You know what crypto's like. It's not very predictable in short-term time horizons. So it kind of goes where it goes. But if you say to me in 5 years' time, does ETH have a larger market cap than Bitcoin? Probably. In 10 years' time, I have no idea.
So Raoul Pal with a price target of $20,000 on Ethereum within the next 12 months. In Raoul's own words, the biggest, clearest bet of all is Ethereum. Do you agree? Let me know in the comments. Next up, we covered him last week on the channel. It's James Wang, who previously worked alongside Cathie Wood at ARK Invest. After hearing about and researching Ethereum, James Wang quit his highly coveted analyst role to dive full-time into DeFi. Here he is explaining why he thinks Ethereum is undervalued and what price it will go to.
The reason why I kind of quit CeFi to join DeFi was really it was so obvious that Ethereum was turning out to be a computing platform and a technology. And the most successful cloud computing platform is AWS. It's not a perfect analogy as I kind of dug into the details, but it does give you a sense of the scale and potential. AWS didn't start as a computing platform. It started as a storage platform. The first service it launched was a service called S3 for simple storage. And this is like one of the things that EIP 1559 achieves, that it gives this kind of elastic block size, right? It's able to absorb more computation based on demand. I think this is just like the very, very beginning of building out a compute infrastructure. Right now, Ethereum itself hasn't scaled. To scale, it needs to go to ETH2. This is really an optimization for ETH1 right now. And that to me is how early it is, right? Right now, Ethereum, the amount of developers building on it is tiny. It's almost not visible compared to the number of programmers in the world. So for me, it's like Ethereum has made a very important software change that makes the system much more robust and self-regulating. But ultimately, like the really amazing applications that's going to be built on top have barely begun. We have like a handful of them. We have like Uniswap and Maker and Chainlink, but like the real ecosystem takes off when the value of the software above the ecosystem is worth more and more, takes up more mind share than the base layer itself, right? Nobody thinks about AWS today as a consumer. We just use Netflix and the bits just stream through like water, and we don't think about it. That's the moment of success, and we're like not even 2% there. That's why I'm so excited to like wait for that future to arrive. In 2017, we weren't sure what Ethereum was able to do. We only had this idea that this could be a new kind of computer for the internet, a new platform for the internet, but we had no idea. So all kinds of ICOs, initial coin offerings came out, and we had stuff from DentaCoin and weird things that didn't make any sense. Over the last 2 years or so, 2 use cases actually have emerged for Ethereum. One is this thing called decentralized finance, or what people call DeFi. Basically using Ethereum to do things that banks used to do, borrowing, lending, and things like that. The other one is NFTs, non-fungible tokens, where essentially any artist now has a piece of magical software that allows them to mint unique and scarce digital assets. We could never create scarce digital assets prior to, practically speaking, Ethereum's kind of NFT technology. So now we have these 2 things. If you try to value Ethereum 3 years ago, you couldn't have come up with any of these because you wouldn't have known ahead of time that they were going to be invented. So narrowly speaking, you could value Ethereum's opportunity in terms of the scale of the financial system if you just look at DeFi, and that's roughly speaking about $3 trillion a year. That's the amount the global banking and auditing system it generates per year, about $3 trillion. But yeah, like basically it's like if you just want to take a conservative view, take the global financial system and the banking system and the auditing system, $3 trillion in revenue a year. If Ethereum captures 0.1% of that revenue, it would be worth about $4,000 a token. If it captures 1%, it would be worth $40,000 per Ethereum, per Ether. And that's a 20x from where we are today. So like that's very clear. And that's only one use case, right? And because it's a platform, it can, like 6 months from now, we could be talking about some entire new case we couldn't have imagined and estimated right now.
So James Wang explaining how Ethereum could go up to $40,000, if not more. The point he makes about really the only 2 big applications on Ethereum right now being NFTs and DeFi is a great point. What happens down the line when there are 3 other large applications built on top of Ethereum or more? The sky is really the limit. Now, finally, perhaps the most bullish of analysts of all is James Wang's friend, Nikhil Shamapant, who authored a 79-page research report outlining how Ethereum can go to $150,000 by 2023. Here is Nikhil explaining to James Wang his reasoning behind this price target.
I listened to the Bankless like ultra bull case for Ethereum, and the highest price target was 20,000, and I was like, that's below my base case. You know what I mean? Like I'm like, maybe I'm just insane. I was like, who am I to say that they're wrong? But it would be a real shame if, I was thinking to myself at the time, I was like, it would be a real shame if Bankless like sold their Ethereum at 20,000 and it ran to like 150,000 because they knew, like if anyone were to know,
push camp out there.
Yeah,
right?
exactly. If anyone were to know this was going to happen, it would be them. And again, it's not that they got any of the analysis wrong. Like they're on it, like their fingers on the pulse, right? Like they know. It's just when it comes to like the next 18 months, there are these just unique attributes that I think all these analogies are going to break down. And so if you have these, it's a cycle, you have to sell at the top of the crypto cycle because it's going to go down because every 4 years it goes up and then it goes down. Well, what happens when that cycle breaks and you sell and it goes up? And then everyone gets left behind and it's part of my thesis where it's like, if it breaks and it goes from 20,000, maybe it goes down a little and it breaks out of 40,000, everyone FOMOs back in. Like that's how crazy things happen, And but do you really want to have missed that much of the move? Anyways, that's kind of what the impetus was like, let's get people who kind of have done the work. Let's get them like the outcome they deserve instead of having them cash out like 7x before the peak, is at least per my thesis. So you've seen what the price of Apple has done in the past 5 years, 10 years, I think. Well, look back to when Tim Cook came over. Apple's cash flows were insane. Steve Jobs, was no longer CEO. Everyone was worried about the product. And a lot of people were skeptical because they were like, well, what product is Apple going to ship? But there were some investors who were like, wait a second. Tim Cook is going to take all this cash and his philosophy is to do share buybacks. He's going to take, I don't even know what the numbers are, like $100 billion of
$1 of balance sheet to work with.
Right. And he's going to just buy back stock. Well,
that's right.
So that has a theoretical effect on like earnings per share and all this stuff, but it also has the effect of just buying shares of the company, right? And I'm not arguing that in the short term that was just like a Kickstarter, but I do think there were a lot of really astute investors who, for instance, when Warren Buffett comes into Apple stock, I don't think he's arguing that he's suddenly a technology guru who can see that Apple's going to release AirPods, right? I think he looks at a huge buyback and he's like, that is structurally, Apple will be at a higher price in the future. And so if I buy it now, and again, I don't want to give the impression that my Ethereum thesis has anything to do with a Warren Buffett philosophy, but just to show you, like, this isn't a unique, like, I'm not coming up with a way of looking at assets that
this happens in the stock market all the time, right?
Exactly. This is not a one-time thing or the first time this argument's been made.
But Ethereum is because it's so programmable, it can, like, its equivalent to a stock is the number of shares outstanding. Like, there are things that can happen, and Ethereum's equivalent is the total ETH supply, right?
Absolutely.
And there are things like with EIP 1559 and the merge, like crazy shit happens to the supply. It will be like I don't know. It will be like Apple saying, we have this new model where I don't know, every employee we have right now issues a lot of stock to employees as the stock options. Instead of cashing out those stock options, they will be burned instead. So they will never enter the pool. Like,
right. Exactly.
That level of mechanic. And when you apply that level of mechanic to a thing with where the price is heavily, influenced by the supply mechanics, it has dramatic consequences completely independent of the technology fundamentals and adoption.
Absolutely.
Things like that.
Yeah, no, the programmability of Ethereum, it makes everything, it accentuates the effect completely, right? So yeah, you're absolutely right. Like, if they're buying back shares, like, it's an effect, but it's mostly going to be more of that theoretical effect where it's going to raise earnings per share and people are going to, agree that that's worth something instead of a supply demand dynamic. I mean, there's something to that, but in the case of Ethereum, you're talking about right now there's 12% of Ethereum that's just literally locked or staked. No one can touch 12% of it. So that's like, it's the equivalent of like an insider coming in and owning 12% of it. And now I'm telling you, like, that's going to burgeon up to like, we're going to have like 20, 30%, and it's just going to keep accelerating.
Right.
So there's Nikhil Shamapant with the most bullish outlook of any analyst I have seen thus far. Now, finally to finish off, the creator and founder of Ethereum, Vitalik Buterin, recently did an interview in which he spoke on what the next big applications are going to be for Ethereum and if Ethereum is here to stay long term.
Wondering, what is the killer app for Ethereum that could lead to widespread adoption, much like email was for the internet?
I think there's a few candidates. DeFi is obviously one of them. I think the blockchain-based financial things have always been attractive because the traditional financial system just sucks more than traditional centralized tech, right? Like, if I send an email to someone in Guatemala, then they're going to receive it in 1 second. With finance, you can't even say that. A lot of people and companies even today just use cryptocurrency to send money internationally. Outside of finance, I think one interesting area where I think blockchains might go. You notice that in order to access your assets in Ethereum, you need to have an account. We're getting to the point where there's a lot of work that's been done on making these accounts very secure. And so instead of just being accounts that hold money, these turn into fully blown profiles, right? And once you have profiles, then you can start doing decentralized social media on top of that. The social and financial things that you can do with that, even working together, is something that I think could be really big.
Now, whether Bitcoin, Ethereum, or the blockchain really are changing the world seems to be an ongoing debate. Is crypto the future, or is it a fad?
I think it's the future that contains fads, much like the internet was the future and the internet contained fads. There's definitely specific kinds of applications that do get overhyped from time to time, like ICOs back in 2017, and then certain kinds of DeFi right now. But at the same time, there's other DeFi projects that really are valuable. There's a combination of both, right? And figuring out which is maybe it's something that's difficult to see ahead of time, and it's something that we as an ecosystem are going to find out.